Hello viewers, in this module I'm going to explain some key facts and calculations of arithmetic mean that is considered to be the simplest and most widely used measure of a mean or average. It simply involves taking the sum of a group of numbers, then dividing that sum by the count of the numbers used in the series. For example, if we want to calculate the average output of a group of 4 workers during a particular week, then it works as follows. Suppose the output of 4 workers is enumerated as follows. The names of workers are given in the left-hand column while the output in units is given on the right-hand column. For example, Adam's output is 34 units, Smith's output is 44 units, Grace's output is 56 units, and John's output is 78 units. When we add up all the output units, it comes to 212 units. Since there are 4 workers involved in producing the output of 212 units, therefore we will divide 212 by 4 and the average output or arithmetic mean will be 53 units, implying that on average each worker has produced an output of 53 units. However, it is an average and we can see that the 2 workers, Adam and Smith, produced less than 53 units, while 2 workers, Grace and John, produced more units than 53. This is the limitation of the arithmetic mean, that the average figure calculated by applying this formula may not be representative of actual values. You need to remember the following points. 1. The arithmetic mean is the simple average or sum of a series of numbers divided by the count of that series of numbers. 2. In the world of finance, the arithmetic mean is not usually an appropriate method for calculating an average, especially when a single outlier can skew the mean by a large amount. 3. Other averages used more commonly in finance include the geometric and harmonic mean. A related question may be how the arithmetic mean works. The arithmetic mean maintains its place in finance as well. For example, mean earnings estimates typically are an arithmetic mean. So you want to know the average earnings expectation of the 16 analysts covering a particular stock. Simply add up all the estimates and divide by 16 to get the arithmetic mean. The same is true if you want to calculate a stock's average closing price during a particular month. Say there are 23 trading days in the month. Simply take all the prices, add them up, and divide by 23 to get the arithmetic mean. The arithmetic mean is simple and most people with even a little bit of finance and math skill can calculate it. It's also a useful measure of central tendency as it tends to provide useful results even with large groupings of numbers. However, we need to remember that the arithmetic mean isn't always ideal, especially when a single outlier can skew the mean by a large amount. Let's say you want to estimate the allowance of a group of 10 kids. 9 of them get an allowance between $10 and $12 a week. The 10th kid gets an allowance of $60. That one outlier is going to result in an arithmetic mean of $16. This is not very representative of the group. In this particular case, the median allowance of 10 might be a better measure. Let's do another exercise to further understand the calculations of arithmetic mean. This distribution shows the number of employees absent per day. For example, on the left-hand column, it is number of employees absent, and the right-hand side column, that is number of days of frequencies. For example, it will be read like this. 2 employees were found absent on 2 occasions, that is the frequency. 3 employees were found absent on 4 occasions. 4 were found absent on 3 occasions, and so on and so forth. We take number of employees absent as X, frequency as F to calculate the arithmetic mean. So you just look at the table. The extreme left column X represents the number of employees absent. Middle column F is the frequency. And the right hand side column is basically the product that we multiply each value of column X with the corresponding value in column F. For example, 2 multiplied by 2, Fx is 4. Similarly, 3 multiplied by 4, Fx is 12, 4 into 3 is 12, 5 into 4 is 20, 6 into 3 is 18, 7 into 3 is 21, and 8 into 3 is 24. We add up the frequency column, that comes to 22, that is sigma f, and sigma fx, so the sum total of fx column is 111. Now we are going to apply the formula of arithmetic mean, that is x bar or arithmetic mean is equal to sigma fx over sigma f. So sigma fx value is 111, whereas the sum total of sigma f is 22, and we get a figure of 5.045. So rounding to the nearest whole number, we can interpret the result that on average 5 employees were found absent per day. Now we attempt one more example of a grouped frequency distribution for better understanding of the concept of arithmetic mean. As part of its preparation for a wage negotiation, the personnel manager of a company has collated the following data from a sample of pay slips. She wishes to be able to use the average weekly wage figure in the negotiations. Now we need to evaluate the arithmetic mean of the sample. As we can see, the left-hand side column, that is the weekly wages per dollar. So, and the first row you can see the minimum wage is $180 and the maximum is below 185, and the number of employees, that is the frequencies, 41 employees fall within this bracket. Similarly, in the second category, it is from 185 to under 190, and 57 employees fall within this bracket, and so on and so forth. Now, the extra difficulty in this problem is clear. As the data have been collated into classes, a certain amount of detail has been lost, and hence the values of the variable x to be used in the calculation of x bar or arithmetic mean are not clearly specified. Short of actually having the raw data, the actual wages of the employees in the sample, we can only approximate the value of x bar or arithmetic mean. To do this, we adopt the obvious approach of taking x to be a representative value of each class, the most plausible being the midpoint. Doing this, we have the following three columns: column X, column F, that is frequency, and of course the product column Fx. Now in column X, the first value or the midpoint is 182.5. That is simply how we have calculated it. We have added the lower and the upper limit of the first class, that is 180 plus 185 divided by 2. So the middle point is 182.5. Similarly, for second upper and lower limit class, it is 185 plus 190 divided by 2, that is 187.50. The same applies to 192.50 and onward. Now, since we have found the middle point or the value of x, so we are going to multiply each value of x with corresponding value of f. And for example, if you multiply 182.50 with frequency 41, you get a value of 7482.5, and the same will apply to all other values. So the sum total of frequency is 170 in this case, and the sum total of fx class is 32,400. Now we have to apply the formula, that is x bar or arithmetic mean is equal to sigma fx over sigma f, that is divided by sigma f. So we are going to divide 32,400 by 170, and we get a value of $190.60 approximately. So hence the manager can use an average weekly wage of $190.60 in the negotiations. I hope you enjoyed this conceptual module about arithmetic mean. For watching more such videos, please do subscribe to my channel by clicking the small icon on the right side of the lower corner of the screen. And also share and like this video. Thank you for watching.